You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it. You got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Boot Camp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, your Options Boot Camp drill instructors, Mark Longo and Dan Passarelli, will break it all down for you. Old trading walks into a bar. New trading raises it. Unlike some guys, Tasty Trade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, Tasty Trade's got the most advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/ride with us and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. Fall in boot. It's time to get into peak options trading shape. It's time for Options Boot Camp.
All right, everybody, welcome back to Education Wednesday. Time once again for Options Boot Camp, episode 2 of our doubleheader for this week. As you're listening to this next week, of course, for all you on-demand folks, I am down at the big Futures Industry Association conference in Florida, hopefully finding some interesting nuggets for you folks on upcoming shows. Remember, if you want to check out all those shows, including the crypto rundown, the futures rundown coming up immediately after this program, you want to join us on the live, get your name in the hat, pro Q&As, options oddities, all sorts of fun. Only one place to do so, theoptionsinsider.com/pro is the place to go to learn more. And I wish I could say this is the only place you'll hear the black-hatted one himself, but he's been popping up all over the place on the network lately, including just this Monday on the old option block. Yet another reason you should be listening to the full network, listeners. If you're a black-hatted one fan, none other than Mr. Dan Passarelli from Market Taker Mentoring. Mr. P, welcome back to OBC, sir.
Hey, good to be back, Mark. Good to be back.
All right. The folks are trying to get at us with a whole boatload of questions to see how many we can tackle this week as we roll out the mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, let's get wild and woolly. Dan, are you ready to tackle some Q's with some A's, sir?
Yeah, man, let's do it.
All right, let's see who we've got first in the hopper. By the way, if you folks listening live on the Pro, if you got a question, by all means, hit us up. You folks get bumped to the top of the list. We like you folks over there. All right, you're going to take the time to listen live. The least we can do is answer your questions, listeners. Let's get out here to Claudio. Claudio's first up. One of our many overseas listeners. Welcome, Claudio. He wants to know, is there much difference between how institutional traders hedge their portfolios and how retail does it? And is there anything we could learn from their strategies. Well, I have some thoughts on this, but Mr. Dan, I've been talking for a bit. I will let you go first. What do you have to say to our boy Claudio? He wants to know, is there much difference between how the big boys hedge their portfolios and how, let's say, the proverbial 10-lot grandmother from Iowa does it?
Well, buongiorno, Claudio. So here's the thing. As far as institutional traders go, institutional traders, like, it's just such a diverse bag, you know? I mean, there are some who are just maybe using options for leverage and doing what they call Delta One trades. There are some that are doing nothing but covered calls. There are some who, are collaring. There are some that are doing volatility arbitrage. Like, they just do such different things. I would say a lot of retail traders, like the way retail traders hedge is just basically by putting on limited risk positions. And if anything, just maybe more managing them and taking them off early rather than like trading stock against it to neutralize your delta. So is there anything you can learn from how institutional traders do? And, just with my experience having been a market maker, which is not really an institutional trader, but I mean, I look at it as like delta hedging, trading the stock to neutralize your delta. And I would say that it's valuable to understand that process because you'll understand volatility in general so much better, but you'll probably never actually do it. So, yeah, that's kind of all I got for you, man. The more you learn, the more you earn, but I don't know if trying to mimic institutional traders' hedging strategies is going to be practical, I would say.
All right, sir. Well said. Again, I have some thoughts. I'll add them really quickly because I want to squeeze in a lot of you folks here. At the end of the day, I wouldn't get too worked up, Claudio. At the end of the day, a lot of big funds, a lot of big asset managers are just buying puts like the rest of you, or put spreads, and they're selling calls against. I remember when I first walked into Intel from the days of the SPX and the index days, I was kind of surprised to see just how monolithic the flow was. Now, this was back in the go-go explosive.com days, but we're seeing a lot of similarities right now in the meme stock palooza. A lot of big funds were coming in, bidding up the put skew, because guess what they were doing? They were buying puts to hedge, and they were crushing the call skew because guess what? They were selling calls and covered calls for income. So there's still a lot of that at the end of the day. Really, it's just talking about more size. You can get some nuanced things. You can talk about variance like we do sometimes on our Volatility Views show, and some very, let's say, more esoteric things. But for the most part, the lion's share of the big funds out there, I would say they're utilizing less sophisticated strategies than what a lot of our very high-end retail are doing out there. They're not writing in asking about iron condor swaps or all these kind of ratio crazy spreads. They're buying puts to hedge. They're selling calls for income. Sometimes they're doing it as a collar, as a combo, but that's really about as savvy as 70 to 80% of the institutional flow gets. So I wouldn't get too worked up over it, Claudio. Chances are you know more than a lot of, especially if you're listening to this show, than a lot of the big fund managers out there who claim to know a thing or two about options. But trust me, I've talked to a lot of them. Most of them do not. All right, let's keep rolling. Let's get out here. Dan. I got Dave on the brain, Dan. I've been doing the day drinking today, Dan, not you. All right. Next up, this is our regular writer inner, Diver SK. He's the one, Dan, who's given us a lot of his updates on his wheel trades. He does repeated wheel trades. He plays with the deltas. And I think it was like a 70 delta wheel trade. He's been updating. I've kind of lost track of his updates. So maybe Diver, if you want to put together one big epic what you've been up to of late and send it in, we could catch up, Dan and I. I've lost the thread here, but also you've been doing it apparently in TQQQ, which is a levered 3X Qs product, Dan. So apparently, I think he was doing it in AMC and some other names. That's not sexy enough for him now, Dan. Now he's doing wheels in TQQQ. He posted last year, nothing like getting run over by a freight train. Oh, I guess it didn't work out well. But he commented recently that patience brings a smile to his things. I guess he's doing well now. These recent whipsaws, I guess, have done well for him. But what caught my eye, Dan, I guess we missed this. He sent this to us back in December of last year. He says he's bugging us at Options on the old OBC to do a deep dive on rolling. I would like to know how the black-hatted one manages his losers, not in generalized terms, but in specific terms, specific example type details. In 20 plus years, he's been doing it for a while, I rarely take a loss. Ironically, Dan, we just touched on rolling last week. I think you said your guideline was pretty much if it touches the strike, you're out. But Diver SK wants to know if you have any more specific examples you can share with him on when you like to roll.
Yeah. This is something near and dear to my heart. It depends on what my objective for the covered call or cash secured put is. If my objective is to skate, that's one thing. If it's to get a sign, that's another thing. And sometimes I'll roll like, I was just looking at doing this today, but I wasn't able to get it off in, what was it now? CLS. Yeah, in CLS. That one, I've got some puts that are really deep in the money, and I like the stock still in the long term. So, I was just going to take assignment, but, then I decided to do one of my favorite rolls where when the option is super deep in the money, there's no time premium left. I'll roll to a still in the money strike, but has some time premium so I can suck a little more premium out of it. I wasn't able to get it off in CLS because those options are in super liquid, which I'd prefer to trade liquid options, but I'm not completely morally opposed to them. It's just that you're limited in some of those rolls in an illiquid name with a super deep in the money option. This, if you're interested in exact specific examples, not general, that is what my Substack is all about. The paid subscribers see my wheel trades. I do a write-up on every single option adjustment or roll that I do. So yeah, if you or anybody else wants to see how I roll my wheel strategy trades, that's where you find it.
All right, listen, let's keep rolling. Let's go out here to David Schmeid, maybe Schmeid. If I'm mispronouncing that, I apologize, David. He has 3 quick questions for us. He says, first off, you mentioned a chat on your show. Do you have a public chat? Well, the answer is no. The chat is part of our pro offering there, David. So if you want to check it out on the pro, theoptionsinsider.com/pro, that's where you go. That gets you access to the chat and also a bunch of shows and a bunch of other cool stuff, early access to a lot of content, giveaways. The main driver really there are the 2 exclusive shows you get. You get your own podcast feed. And of course, you get to hang out in the chat and make some fun friends. And there's a good group. We tend to filter out the day drinkers like Dan. We get the good folks in there. So if you want to join us over there, David, theoptionsinsider.com/pro. Tell you what, since you asked so nicely, maybe I'll have our producer send you a little bit of get past the velvet rope cards. You can check it out for yourself. All right, let's keep rolling. He also asks, Stock to Trade advertises on your website. Do you recommend their service? I'm not familiar with them at all, David. Remember, we have a very high standard on the network for who can advertise, obviously. People take advantage of that on the website sometimes. They come in, they try to buy ads on the display through giant services like Google Ads. We try to filter those out on a regular basis. We don't catch them all the time. So I'm not familiar with Stock to Trade. They might be great. They might not be. I'll have to go check them out. But if you see something displayed on a random banner on our site sometimes, doesn't mean they have our imprimatur. It just means they went in through the Google ad service and were able to find their way onto our site. So we'll go through. We try to keep it updated on a regular basis, but I can't say. If you hear them on our network, that means we've discussed and analyzed them in a more detailed capacity. If you see them in a remnant banner somewhere on a back page on our site, chances are they're trying to sneak through the back door there, David. And then our site says, download our app. You don't see an app. Yeah, the app is live there. It is available in iOS right now. So if you're an iOS user, you can get it for iPad, obviously iPhone. I think I'll have to go check. I know they're updating both. I know iOS is back up. I'm not sure Android is back up yet, so I'll have to go make sure. But I know for a fact right now the iOS app is back live in the store. So if you're an iOS user, like a lot of our listeners, you can go get the app right now, listeners, and that'll give you access to literally everything we've done since the dawn of time, 18 years. So there's two great ways to get all of our content. The website is one. You've already discovered that, obviously. But the second one is, of course, the app. That's a great way to go through. You can build curated playlists of the shows that you like. So if you want to filter out no black-hatted shows, I get it. Then by all means, you can create that playlist in our app. It's a very cool thing. And again, that's all free as well. So check it out over there on the App Store. Great questions there, Mr. David S. All right, let's keep rolling. From David S., we go to Chuck T. Little Chucky T. He says, hey, dudes, new listener. Well, welcome. Welcome to the party, Chucky T. He says, I heard about you on Reddit. Oh, well, cool. He says, I've been going down a deep hole about gamma scalping, but I haven't seen many people talk about it who've actually done it. Well, you've come to the right place, Chucky T. He says, one of my buds said you guys say retail shouldn't do it. Let me read that again. There's a lot of negatives in that sentence. One of my buds said you guys say retail shouldn't do it. Well, yes, technically that is correct, Chucky T. So now you have my attention. Why is that? Sorry if you've answered this already, but you guys have a lot of episodes. Yes, we do. We do have a lot of episodes. It can sometimes be intimidating. I get it. To go back there and go all the way into the 200 plus episode archive, going all the way back to, I believe, 2013. But Mr. Dan, he's right. We have talked about gamma scalping before. We've typically said it's not really for retail. What are your thoughts for Chucky T, who wants to know why?
Yeah, Chucky T. So I have actually mentored 3 different students on attempting to gamma scalp because they really wanted to know. And I only would accept like our best, smartest students to show them that. And none of them could really make it work out. The thing about gamma scalping is you're basically trading synthetic straddles and you're hedging with shares of the stock. And so not only is it a pretty heady sort of thing, you got to be really, really smart, but you've got to have just massive margin and massive capital, because, you know, you're basically what you're really trying to do is make Vega points really, and maybe in a perfect world also profit on the gamma scalps themselves by making more than your time decay. The real main thing is the margin. If you have retail portfolio margining, you're close to being there. But I think you still are probably not going to be able to do it. And you've got to trade as close to the middle of the market as you can. You can't be giving up slippage in terms of the bid-ask spread. You got to be in front of your computer all day long, obviously. And yeah, you got to be really, really capitalized, like, a couple $100,000 at least, I would say.
Yeah, it's just not capital efficient. Who asked that? Chucky T for retail to do it, really. I mean, if you have that kind of cash sitting around and you want to tie it all up doing this one strategy, by all means, go ahead. You have to remember, when Dan and I were doing it, we were market makers. We had access to professional accounts. Commissions were really not that big of a deal. Capital was not that big of a deal. We could sling millions of dollars worth of stock and options against it, and it wasn't a big deal. That's difficult for retail to replicate. So just remember that out there. It's not really a strategy for your typical 1 to 10 lot retail trader. There's better ways to utilize your capital than that. But glad you discovered us, Chucky T. Tell your friends on Reddit to come join the OBC party. All right, Dan, we got more. You talked about liquidity earlier. We got a question about that from Jalen Taylor. He says, how important is liquidity when choosing an options contract? Would you argue that it's the most important thing? Any tips or tricks for trading options on less than liquid stocks? All right, a multi-parter here. How would we rate liquidity? Is it the most important? It's definitely up there. I mean, if you look at some of the names out there you want to trade, we joke about it on Volatility Views all the time, that I would love to trade more SVIX options, but the markets are pretty thin, pretty illiquid. you'll see that evident in the spreads out there, listening. Listen to our Options Oddity show, or even the Option Block show with the Flowmaster there, where we talk about unusual activity. Some of these markets we're talking about, they're nickel bid at $2 offer for some of these less liquid names. So they're almost impossible to really trade profitably out there. The slippage is just enormous. It's going to dramatically wipe away any type of profit potential in those trades. So is it the most important thing? I never thought about it on a graduated scale like that, but it certainly, if it's not the top, it's in the top 2 or 3. If you don't have a liquid name, or at the very least a decent spread to trade around, everything else is kind of moot. So it might be the number one. Let's see. Any tips or tricks? Well, Dan, you were just talking about this as well. It also comes into play when your options go pretty far in the money, and now you have a less liquid strike with some wider spreads to deal with as well. So Jalen wants to know, first off, is liquidity the most important thing? Where do you rank it, Dan? And then B, do you have any tips or tricks for trading options on less than liquid stocks other than don't do it?
Yeah, I mean, the question of, is it the most important thing? Like what is the category? I mean, the most important thing is being good at forecasting and, using the Greeks and volatility and stuff. But I mean, as far as which products you'll allow yourself to trade, yeah, I mean, that might be, it might be the most important thing. Okay, I'll trade just the 25 most liquid names and not trade anything else, and I'll look for trades only in those 25 names. Yeah, I mean, if that's the category and that's where you're going with this, it probably is the most important thing. But I mean, as far as tips or tricks for trading options on less liquid stocks, that depends on your objective too. With covered calls and cash secured puts, if my objective is to get assigned, I don't really care how liquid it is. If I just can't get into the trade because it's so illiquid, then no, I'm going to skip it. But I worry more about getting out, because when you need to get out, you need to get out. You can choose to get in, but when you need to get out, you need to get out. So I will trade illiquid options if it's covered call or cash secured puts, and just let them go all the way till expiration.
If you just want to ride it to death, I suppose that can work. But still, the market's, nickel bid at $2, Dan. Kind of hard to even get in, right? And
yeah, it is sometimes. Yeah, for sure.
And how much of a killer is it when, let's say, you buy a call and the underlying moves, let's say you buy a call for 50 cents and the stock shoots $3 in your direction, like, woohoo, I win. And now you look at the market and the market is 35-cent bid at $2. And you want to get out of this call, and the only bid is for below where you bought it. That could suck your soul away sometimes too. So yeah, it can be disheartening out there. Who asked that question, Jalen? So definitely, if you see those crazy wide spreads, luckily it's easy to spot an illiquid name. You can see it right there in the spread. The spread doesn't lie. The spread tells you everything you need to know. If it's crazy wide, then maybe be a little bit judicious. If you can try to work some orders around the mid-market and you're not getting filled, no one's stepping up, you could say maybe you're not going to have the same problem getting out as well. Then maybe you move on to greener pastures. So yeah, it's definitely, I've never considered it quite in that scale before, but it's certainly, if it's not the top, it's definitely up there. It's definitely the top 2 or 3 in terms of, that might be a good question for the audience. Is liquidity the most important consideration for you when trading options? Might be a fun question of the week. All right, let's get out of here. We're already running up against it. We have to get to the futures rundown pretty soon. Don't want to keep our boy Jamal waiting too long. We got a question here from YouTube. A lot more of you coming in on YouTube. We're doing some work, listeners. I know our behind the scenes, our network distributor was kind of double posting a lot of shows. People are asking, why are there 2 copies of each show on YouTube? So we are working to fix that for you. But I know a lot of you are enjoying the YouTube, looking to add more fun there for you in the coming weeks and months. So stay tuned on the YouTube. We got Rift Dealer coming in on YouTube. By the way, I like his avatar. He's got Michael Douglas from Falling Down. It's a great movie. But he writes us, where is the main place to hear you guys if you do live shows? Well, the main place for that, the only place right now for live, is on the Pro, theoptionsinsider.com/pro. That'll get you into the live stream. That'll also get you access, of course, to the exclusive feed that will have multiple additional shows for you there. Lots of funny. So I used to listen a lot more a few years ago. He's gotten busy. I get it. People's schedules fill up. But he says, always great content. Thanks. Well, thank you, Rift Dealer. If you want to join the live, it's over there on the Pro. Of course, you can get it on demand, most of the shows, on just about every platform under the sun. And if you want to get the exclusive shows, again, head on over there to the Pro. Really quickly, I lied. One more, Dan. We got here Senor Ortega. They say, hello to my favorite options pod, OBC. Well, hello. I thought it might be cool to have an episode on advanced options order types. I'm particularly interested in OCO orders, why use them, which firms offer them, etc. You know, Dan, that might not be a bad subject for a future episode. I don't think we've really gone deep into order types. Certainly not in a while. What are your thoughts, Dan?
Hey, that is a great idea. Yeah, let's do it, man.
I love when we have user-suggested topics, Dan, because that means it's hot. It's top of mind with the folks out there. Unfortunately, Dan, that music means we are done for the show, but that also means for you can go back to your day drinking, so that's a good thing. But before we go, Mr. Dan, if folks want to check out your Substack or MTM, where should they go? What should they do?
Yeah, we talked about some Substack stuff. Anybody who liked this episode and is interested in these topics, you should definitely check out the Substack. It's wealthbuildingwithoptions.substack.com, or just go to Substack and search for Wealth Building with Options. And if you want to see every adjustment and roll that I make in my wheel trades, that's for the paid subscribers, and it's like $30 a month. It's not bad.
There you go. Check them out over there at Substack.com. And while you're checking things out, sir, and listeners, make sure you check out our friends over there at Tasty. They are the reason that you can keep getting the show in your hot little hands and indeed your ear holes over there. TastyTrade.com, the place to go to kick the tires and light the fires. That's going to do it for us on OBC. But if you're hanging out in the Pro, we'll be back instantaneously with a great episode of the Futures Rundown. I will be joined by our good buddy, Mr. Jamal from Tasty Trade. So we'll talk some futures. Yes, they do talk futures over there. So that should be a fun one. Another reason, listeners, why you should be subscribed to the full network out there. Then back again with our usual array of content throughout the week, including our doubleheader of This Week in Futures Options and the option block on every Thursday, Friday vol views, and then exclusively for our pro friends, we come back with Options Oddities, which, man, that show has been a banger of late. If you haven't found something to trade on that show, you're just not trying hard enough. Then, of course, back again on Monday for the Crypto Rundown and the option block all the way through again to next Wednesday, another episode of Options Bootcamp. Stay safe out there, everybody.
Old trading walks into a bar. New trading raises it. Unlike some guys, Tasty Trade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, Tasty Trade's got the most advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/ride with us and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.